Good afternoon, everyone. I want to welcome each and every one of you to our Short Verticals webcast. We get together every week at this time and discuss how we can use short vertical strategy. Now, some of our trades that we're going to show you the results on have turned out pretty good. All right, but it doesn't always work out that way, right? We have had trades just as easily not go our direction. Okay, today what we're going to do, we're going to repeat our process that we've been doing week after week, but today we're going to focus on automating an exit. Okay, an exit if we hit our profit target, and a exit if we hit a profit loss. Not that we want to, but got to make sure our bases are covered. I am joined in the chat by Scott Thompson. I'm happy Scott's here. He's one of our managers and teaches one of our classes here as well. He's a great veteran of the markets. He knows short verticals inside and out. As you have questions, go ahead and pose them. I'll keep my eye on the chat. Scott may have to answer some of the questions I can't quite pick up, but you are welcome to give us those questions. And those of you that are listening to this on the recording, and I know there are lots of you that do, when you have a question, put your question in the comments section of YouTube, because we go back and review those, get your questions answered fairly quickly as well. Now, I hope you're following us on X. I'm Connie Hill CS. Scott is Scott Thompson CS, and we'll post educational content out in our X account throughout the day as we see things that we think you might find interesting. We share it with you. Let's go through our disclosures and get on with our agenda for today. Options carry a high level of risk and are not suitable for all investors. What we talk about today should be considered educational and informational. Don't consider it a recommendation. We will be using the Thinkorswim Paper Money application. That software is what you download to your computer. It's the most robust version of Thinkorswim. It has a lot of great tools for option traders, as well as just kind of practicing, having that paper money element over there so you can practice your strategies. Investing involves risk, including the loss of principal. Short options can be assigned at any time up to expiration date, regardless of the in-the-money amount. We want to make sure that you know that's a difference in paper money. It does not emulate that functionality. So we don't want you to get the false sense of security that you could never be assigned early, because you actually can't in a live market scenario. Past performance of any security or strategy does not guarantee future results or success. We have some upcoming workshops that would love to see you join us. We've got Chicago, middle of August. We've got Washington, D.C., first part of September. And then the end of September, a Dallas Market Drive event. If you are close to these cities or want to go there and visit for a few days, take us up on the offer. It's free. We feed you. We're really nice to you. We kind of spoil you a little bit when you go to those events. Now, in our class, we talk a little bit about short verticals. This is an intermediate level class, so there's an expectation you maybe already know what a short vertical is, but I want everybody to be able to follow along, especially if you're somebody that's newer to short verticals. I want you to be able to keep up with us, okay? We're going to look at a lot of example trades here today, and we're going to talk about trade management. And again, we're going to focus on automating our exits today. This can be helpful to people that kind of like to do the same thing over and over again. They've kind of decided what their recipe is that they like to follow, or they're a creature of habit. This can be really helpful to those type of folks. Let's come out here. Let's go out to our paper money. We're going to go out to the charts to begin with here. We've got an SPX chart. Looks like S&P's turned positive here today. And what is it doing? It just keeps grinding higher and higher. Definitely, if we look at the S&P chart, we put in a new high today. If we go to the NDX, let's see. Oh, we put in a new high yesterday. Maybe is approaching that level here again today. All right. So yeah, we've had more bullish market conditions than, say, neutral or bearish conditions. So in our thoughts, we ought to think about, okay, we're going to focus on more bullish short verticals as opposed to bearish short verticals, okay? Let's take a look at one here. We are going to look at Etsy, first of all. I don't know if you're an Etsy shopper. I actually don't use Etsy all that much, but I know Etsy, and they've got a nice business model. And what we're going to see here is it is on our class watch list. We created a couple of weeks ago, and we've been updating this over the past few months. We created a new watch list that we said, any of these stocks that give us an entry signal, whether it's bullish or bearish, we would be interested in trading it. Okay, we're interested in trading it because it's either on the NASDAQ 100, S&P 500. I take that back. NASDAQ general, S&P 100, and we intersected that with the penny increment options default watch list, which are stocks that have a lot of trading activity. And instead of trading in nickel and dime levels, they're trading at penny levels, which as an options trader, we love to see, right? That typically means that, the bid-ask spread is usually fairly tight, which is advantageous to a trader, all right? So Etsy happens to be on our list. One thing I'll look at with stocks is this column right here. This is a 1 month return. Sometimes we'll see high amounts here. It looks like on Etsy, actually, over the last month, it hasn't done so well, but that's because we can see it had a nice little peak here, had a little pullback, made a high, made a higher low. Today, it's making a higher high. So resuming that uptrend, all right? Now, this is a level of resistance here. It might be meaningful, it might not. It hasn't been used for a long period of time. Now, we've been talking about a process. Process number one is identifying stocks from the watch list that we want to use. Okay. Number two is identifying a bullish signal that we like, that we don't mind taking. It could be a close above the high of the low day. It could be a breakout over resistance. It could be a support bounce. It can be something at support, not even bouncing quite yet. Okay. And there may be other signals that you like, that you have on your list of, hey, this is what I want to look for, right? So on Etsy, I would say here we've had our little pullback, and yesterday it looks like it maybe had a close above the high of the low day right here, and today a little bit of continuation. Now, as I looked at this stock earlier in the day, it wasn't up quite as high as it is now, but I think the numbers will still work out for us to look for a trade here. Now let's come over here to the trade tab, and I'm going to collapse our watch list here. And those of you that maybe don't have this 1 month script, I'm going to share it with you out in our chat. Remember, when we share our scripts, they're not guaranteed as to accuracy or timing. And for those of you maybe not familiar with, gee, what do I do with this fine script Connie pasted out there? You can just take this little part of what I chatted out there. It's a little 7, not digit, but a 7 number letter combination code. You take that, do a Control-C to put it as a copy. All right. Come over here to Setup, open Shared Items, paste that little URL in there, and you can hit Preview. Give it a good name. I call mine 1 month % change. To me, that's pretty explanatory. And then you bring it in. You only have to bring it in once. Don't bring it in multiple times. If you bring it in multiple times, you're going to have multiple ones and you're going to be confused. Which one do I use? All right. So just bring it in once. So I'm going to hit cancel here. You would hit import. All right. Now, we're going to go ahead and say we like the entry on this. And let's pull up the option chain, see what our possibilities are. Now, with short verticals, there are a lot of traders that like to use and sell between 20 to 40, maybe 50 days worth of time, depending on how things roll out. Stocks that have weekly options in them sometimes can be possibilities. There can be a lot of liquidity sometimes in those stocks. Sometimes there might not be as much liquidity. In the case of what we're going to look at here today, we're going to go with the August 15s. I did kind of poke around in here. There could be some possibilities at certain strike prices, but I really like the open interest that we were seeing here out on these August contracts, August 15. Have 36 days before they expire, so they're fitting nicely in that window of 20 to 40 days worth of time. What strike price do you choose? Now, there's not like an absolute strike price you have to choose, but some traders might want to target for maybe a 30-something delta, sometimes a high 20-something delta. Ones that want to be maybe even a little bit more aggressive and have a little bit higher return, even though the probability of success might be lower. That's going to be a trade-off with this type of a trade. They might, sometimes they may go for a 40-something option, okay? So you kind of depends on what our choices are and kind of your personal preference. And if you're on your personal preference, you don't see what you like, don't worry about it. Just go on, find another one, okay? Find either, and maybe look in the weeklies and see if there's something in the weeklies if you don't see it here in the monthlies, or maybe you pass on the opportunity altogether. We have this watch list because for the most part, these are really pretty liquid options that we could use in scenarios. Now, Chris is saying here, hey, did you happen to notice earnings are on July 30th? Look it out here. Yep. July 30th, we've got about 3 weeks before earnings. Is it possible that our trade could go ahead and hit its profit target within the next 3 weeks? Yeah, absolutely. You do want to note that earnings is coming up, and there are some traders that want to be out before earnings. And if you're one of those traders, no problem. If earnings were maybe here next week, we might look for a different opportunity. But because it's out here about 3 weeks, we're going to go ahead. But I appreciate you bringing that up, Chris, because, yeah, it's definitely a consideration. All right. Choice of deltas here. This is my delta column. Here's my open interest column. Here's my volume, which is just today's activity. Implied volatilities over here on the right. So they have a fairly high level of implied volatility priced into the options. That means typically they're going to be a little bit more expensive, but as a seller of an option, we don't mind that, right? We don't mind collecting some decent premium. We're going to go ahead here with the 50-55 series, and we're just going to say sell vertical and bring this up. Now, as we look at this, $1.50, does that meet our criteria for a return? Let's run some numbers real quick here on the calculator. Some of you might even recognize it. Maybe you see 150 is our max theoretical gain. We've got a $5 wide spread, so 5 minus 150 is going to be $3.50. So we're going to do max gain divided by max loss. That gives us about a 42% theoretical return. So if you're happy with that, that meets your rules, great. If not, you go find another strike price series that works for you, okay? For our class purposes, we're going to say, yeah, that's fine. We are happy with it. Now, to make things easier, I'm going to come up here and just kind of put that back up to 150 here. And I told you we were going to focus here today on automating our exits. Many times in this class, we have put in an exit or a profit target. In fact, some of those trades that I'm going to show you that worked out really well, some of our class example trades, we put in a profit target. So Thinkorswim, when it hit that value, went ahead and executed the order for us, okay? You don't have to sit there and try to catch it. You can just automate it, let the system take care of it for you. So what I'm going to show you today is called a custom template. And again, this is for the person that just does, they do the same thing over and over again. They're a creature of habit. I'm a creature of habit. I eat a smoothie every day. It doesn't mean you have to eat a smoothie every day. And you might want more variety. But for our purposes here today, we're going to say this is for the trader that likes redundancy, likes to do the same thing over and over. Now, what we're going to do here in our advanced order, usually it comes in with a single order, and I've changed it to a first triggers an OCO. OCO means one cancels other. We're going to put 2 orders out here. One is going to be for a profit target. One's going to be for a loss. But a loss that when it gets to that point, some traders say, I think I'm just going to get out. Don't want to take a max loss on it. We're going to cut it here. Okay. So this is what we're going to do. We are going to create 2 opposite orders. And if you want to follow this process so you can create your own custom template order, you might want to just write down some steps here. Okay, so we're going to build it from scratch. All right, so we have our sell order at 150. And then I'm going to change this man to a TRG, which is a trigger. and this one to a TRG, which is a trigger. What does that mean? That means that we are going to have the action that we're going to take triggered based on whatever credit we get filled at here. And so on this first one, it's going to be our profit, our target profit. All right. Here is a plus and a minus sign. We're going to click on it twice to get a percentage. Now, as we change it to a percentage, what we're going to put in here is we're going to say if the 150 credit, if it goes down 70%, we want to get out, because that means we will have collected 70% of it and only 30% is left. So I'm going to put a minus 70% there. Okay. If we got filled at $1.60 instead of $1.50, because we're basing it on the trigger of this price, it would adjust it for us. Okay, it'll go through and it'll just calculate what that happens to be. Now, that's our profit. If we hit a target of, I should say a target, if we hit a profit, let's format this one to be if we hit a loss. Okay. Some traders, it doesn't mean you have to be this way, but if this goes say 100% against you, some traders are like, that's bad enough. Let's just get out. Trade is not working our way. Okay. You can put whatever percentage you want in here. All right. I'm going to go ahead and we're going to keep that plus and we're going to put that at 100%. So if whatever we were filled at gets 100% the wrong direction, the way we don't want it to go, we want it to trigger us out of the trade. Now we're going to have to configure this as a stop. We can keep this as a limit, and then we've got to make both of these good till canceled. Okay, so there are a few steps here. All right, but once we have this set up, and we're going to save this as a template, then we can use it over and over again. And on our next few trades, I'm going to show you how you use it over and over again. All right, let's go here. I'm just going to unclick this because maybe we get a little bit nicer credit. Maybe not. Maybe we don't get it. I'm going to go back to 150 then. All right. If you like this and you're like, I kind of want to experiment with this in my paper account, come over to this icon that's just to the left of the delete button. Okay, just right here. You can follow my big blue mouse. We're going to click on it, and I'm going to kind of pull this to the front of the screen. And this is saying, okay, we want to save this as a custom template, which means will allow us to use it over and over again. Now, it comes up with a name for it. You don't have to keep the name. You can change it to whatever you want. Okay, so I do change it a little bit. Okay, so I'm just going to make first the FIR or 1ST instead of spelling out first. But first triggers an OCO on a vertical cell. I'm great with that. And then this is saying our first target here is plus 70%, and then it's kind of has a dot, dot, dot. So what I'm going to do here, this one means just one contract. If you always do 5 contracts, you could go in here, change that to 5 contracts, but it may vary depending on the stock, depending on the trade. So we're going to leave ours at 1. Okay. We're going to go ahead and say plus vertical. I'm going to just kind of take out some of these letters so we have a little bit more. I'm just going to go vert, and we'll go trigger plus 70, and I'm going to get rid of those 0.00s so that we can say minus 100, which basically means if we're down 100%. Okay, so we've got this set up as, actually, let's change this. Let's make it look exactly like it looks down here. If it goes down 70%, great. That's what we want. So we're going to say minus 70, and then over here, let's change that to be plus, so it's looking identical. Okay. We're going to recognize what we call this. We're going to remember it. And if we needed to, we could do something here that just kind of flags it. Okay. And the flag that we could do here is I'm going to put an X in the very front so that I know, okay, go look for the one that says X, trigger, blah, blah, blah. All right. Let's go ahead and hit save. Now, at this point, if you did want different contracts in here, different contracts amounts because your position sizing, then you would want to go in and change it. Okay, I did not want to save my template with however many contracts we're going to position size to. I just wanted it to be one. But again, you could change that when you're creating your own template. In our class, we've got a $150,000 portfolio. We'll let ourselves risk up to $1,500 per trade. And on the $1,500 per trade, we certainly don't want to lose that, but we do want a position size to it. So on right now, we say $1,500, and we're going to divide it by our max theoretical loss, which is going to be $5 minus the 150, so $350. This will tell us how many. I must have hit an extra number in there. Let me clear that out again. Let's go 1,500 divided by $350. There we go. We can do 4 contracts. So that's what we're going to do. It's at this point that I'm going to change it. Now, if you always like to do 4 contracts because you're a creature of habit that does 4 contracts, you could go ahead, change it to that, and then go ahead and save your custom template. But for us, like I said, I just want it to be 1. All right, there. I think some of you have lost audio a little bit. I hopefully only a couple of you have. If you need to refresh your browser, sometimes that'll clear up any sound issues you might be having. Okay. We're going to go ahead and hit confirm and send, and we are going to put this in our, it's a bullish trade here, right? A short put vertical. So we're going to put that in our bullish bucket, and we're going to hit send. Send, it's on its way. And then when we get filled on it, it's going to put a little message up here. So I'll make sure that we get it, get filled on it before our class is over. We'll give it a couple of minutes because price might be jumping around a little bit. All right, we are going to look at another stock that is on our watch list. We are going to look at Seagate STX. And what are we seeing on STX? Look how nicely it has just used that 10-period moving average as kind of a bouncing spot. Really hasn't come down here to the 30. It's just been trending really nicely. And it looks like it's up about 13+% so far. Well, not so far, but in the last month. Okay, so it's a stock that's moving along. Now here, as far as, well, what kind of an entry do we have? Let's zoom in here. We'd see, well, maybe we could draw a flagpole here. We could draw a flag consolidation. It looks like maybe it's bouncing out of that. I would say this one's coming down to that support level of 10 and looking to bounce off of it. Now, some traders, they might like to get in when they see the stock at support. They might not necessarily say they've got to see a big bounce off of it. And I would say that STX kind of falls into that category, that it's kind of sitting at support, looks like it's looking to make a move. Let's see what yesterday's high was, 145.92. It's just a few pennies below that right now, but looking like it could make that move. So we're going to be a little bit, not predictive, because we don't know for sure what it's going to do, but we're going to say, all right, it's at support. We like that entry. All right, let's go take a look at Seagate contracts. Up here to the trade tab here. Seagate has some weeklies here as well. And on the weeklies, there could be some things in there. I wasn't seeing as much open interest as I typically like to see. And you guys know I'm a stickler for open interest. We want lots of contracts out there. So we're just going to go to the August 15th. Let's come down here. We're going to be focusing on puts. We want to do a short put vertical again. And here's our delta column. Let's see what maybe some of our choices are. Somebody that wouldn't mind, say, a higher return might go for a 45 delta. Here's the 35. Here is a 26. Okay. And look at all this open interest out here. We love seeing that kind of open interest. Now, what I had eyed before our class started, we'll see if this still makes sense, is this 140, 135. And what we're going to do is we're going to queue up this order, and we're going to use the custom template that we created. Okay, we're going to do a right mouse click. Typically, I'll say sell vertical, but here we're going to say sell custom. And then you have your your choices that you're used to. And then down here, you're going to see some templates that I've created in the past. Well, what's the name of the template that we just created here together in our class? Remember, I told you I was going to put an X in front of it, and I changed the naming mechanism so it said, 1ST first. And we say, oh, yeah, that's exactly what we wrote out. So we're going to go grab it, and look what it does for us. Gives us our one contract, which we have here. It brings in our credit, and then it automated this. I may have made a mistake. This needs to be a trigger. I'm wondering if when I saved the template and changed it to a stop order, I might not have changed it back, because that should be a trigger. Okay, that needs to be a trigger. But we can see the minus 70%. If we get 70% of it, great. That's our profit target. Get us out. Or if it goes against us, see that? I apologize. That did not work perfectly like it was supposed to. Okay, good thing we're watching the details here. If it goes 100% against us, so instead of being up 165, we're down 165, we want to get rid of it. We want to get out of it, right? And that's the one that it's going to hit first. Now, I'm not positive why that template didn't save perfectly. For you, it probably will. This is a demonstration account, and there are a few things in it that sometimes don't go exactly like they should. So I'm going to save this template again. I'm going to give it a slightly different name. Okay, and we'll try it again on our next trade. So we're going to hit this little button here again. Normally, you don't have to come in and save this template again. I am, because it didn't bring it back perfect for me. It could have been user error that I didn't notice when I changed it to a stop, that it changed that back to a stop and didn't have the trigger here. Okay, so that's why we're going to save it again. And I'm going to do the same thing here. I'm going to call this XY first. All right, I'm going to do XY first. The first one was X, this is XY. We know exactly what we called it. We're going to hit save. And then let's position size this one. It's $5 widespread, kind of a similar setup here. It's a little bit better percentage-wise of a profit. The first one was $1.50. This one is $1.65. Okay, so it's going to be a little bit higher than the 42% that we had in the first trade, which is fine for our class goals and what we like to look for. And so here, let's do some quick math. Let's cancel this out. So if we have $5 minus 1.65, that's going to give us our max loss, $3.35. All right, we're willing to risk $3.35 to gain $1.65. And why would we do that? Well, right now, that strike price has about a 59% chance of expiring out of the money. And when we start getting to higher probabilities, that kind of starts at about 60 or so. So it's close to that. Now, if you are somebody that says it must be exactly 60 or higher, then you could maybe even increase your price here a little bit if you wanted to compensate for that. But we're good with the higher return that it is at a 59%. Okay. Marie says, did you click on the ask or the bid? When we set this trade up initially, I did a right mouse click, and then I said sell custom, and then I came down and chose our first template. So it's sell custom, okay? And you could be anywhere on this line. It'll go grab those strike prices for you. All right. Well, if we can risk $3.35, let's take our 1,500, divide that by 335. We can still do 4 contracts. Okay, so we're going to adjust these to the 4. And again, if you're somebody that always trades 4 contracts or 5 contracts or 10 or whatever it is, you could create your template keeping it that way. We didn't want to. We are going to send this one off. We're going to put it in our grouping of both short verticals. And it looks like we got filled on that immediately. Okay. Now, Ronson, why did we do that 100% stop loss, essentially? Many times in this class, we'll put in a profit target, right? And we'll say, if we get 70%, get us out. But there could be some people, and I haven't addressed this a lot, but there could be some people that say, I want to put a stop on that side too. Now, many traders don't, they say it's a hedged position already. It's a higher probability trade. They don't feel the need to do that. They just position size to a max loss. So this is for the person that would want to also put in a kind of a loss target that says, hey, if it gets this bad, get me out. Okay, and so it's going to be 100% of whatever that initial credit was going the opposite way. So in this case, we had 165 as our credit. So if it was going 165 against us, then we'd say, yeah, we want to be out. Okay, so that's where that came from. Do you have to do it this way? No, you don't have to do it this way at all. Yeah, Chris is helping out here as well as Scott. Appreciate that. Bruce says, buying the corresponding call closes the short put. We're not using calls in here at all. We're just simply using the put side of things. All our contracts and our orders are based on those put contracts. Okay, we'll do another example for you here. Have a question for you. How many of you have taken the opportunity to subscribe to our Trader Talks channel? I hope all of you because it makes it so much easier to find our content. For example, I'm going to show you some trades in a little bit. If you want to go back and see what our class was like when we did those trades, being a subscriber really helps you out. Let me show you how it might work. I'm going to come over here to my browser. We're here in our Trader Talks channel, and we've got playlists. So you would just click on playlist, and you would come down about 7 rows is what this has been more recently. And I'm just going to kind of scroll down here gently until we see short verticals. And it's right here. Okay, so you could go into the short verticals list, just click on that, and then you'll see all the previous classes that we've had. And you can see what our last class was. Okay. Or any of the other ones. If you're like, oh, I want to see what the trade was like when we first set that up in the class, you could go ahead, go back to history and find it. Okay, so it just helps you identify our content. The other thing that it does is it kind of tells you what's coming up next, right? That is always kind of helpful to see, right? What's coming up next after we're finished. Mike Fairborn's got a great class lined up on ThinkScript studies. Okay, and he will start at the top of the hour. All right, that's my encouragement for you to subscribe. Now, I want to do one more example trade, and then we're going to go look at what I was saying about the some of our trades working out just as we've followed the recipe and rinse and repeat. Let's come back here to our Thinkorswim. Let's close that out. We're going to grab another stock from our class watch list. And it's not time to update the watch list. We'll probably do it at the end of the month is when we typically do it. So we did it at the end of June. We won't update it again until the end of July. Now, let's take a look at another stock here. There's a couple that I've been eyeing that look fairly interesting. Here's Nike. Let's give us a little bit more perspective here. They already had their earnings. Earnings is out of the way. They had a nice gap up, a nice little run, a little pullback, and what's it doing right now? Bouncing off the 10. If some of you like looking for a close above the high of the low day or a trade above the high of the low day, visually we can see, yeah, this is traded above the high of this low day yesterday. And so some might like to use that as an entry point. So let's go have some fun with Nike. On Nike, it too has some weeklies. And there could be some in here that some of you might want to use. Okay, you might come out to the August 1s or August 8th. Again, we're just going to go with the August 15s. I love seeing so much open interest. Okay, and it's still kind of in that window of time, 36 days, where time decay is happening more rapidly, right? These are trades where that's part of the process, is just letting it decay. Whether the stock stays where it is or goes up like we expect it to, or stays flat, or even retraces a little bit, then we have to exercise a little bit of patience there to allow that time to decay. Even though we get the credit right up front, as soon as we sell, that goes into our account. All right, let's do one more example here. And let's look at what we've got here with Nike in our August 15s. And this will probably, I love this, 142 by 147. Man, that's a tight spread. Only a nickel. Oh, we love that as traders, don't we? 81 by 83, absolutely lots of open interest here. Lots of opportunity to get in the trade and out of the trade. So we're going to say sell custom, and hopefully our thing changed. Hopefully our XY first trigger template saved. Again, it works out in your regular orders, and it could be something with my demo account, but it looks like maybe it was a user error on that first one. Okay, so on this, it's a $2.50 wide spread. Looks like about 64 cents. And again, our template, it filled everything out for us that we had situated, right? If the credit, if we get 70% of it, great, go execute an order. If it goes 100% against us, it's going to be a stop here. It will trigger a market order in that case as opposed to a limit order. So we don't know really what the price of the option would be at that point. We just know that we'd want it to execute it to get us out of the trade. All right. Let's talk about contracts here. And let's talk about the return. Is 64 cents good enough, do you suppose, for our example trade here? Let's go run the numbers. We have $2.50 spread. We're going to take 2.5 minus our max theoretical gain of 64 cents. That's going to give us $1.86. That's our max theoretical loss. All right. If everything in the world goes wrong in this trade, by the time the thing expires, that's how much we would be out. And it's a hedged position. Let's go ahead and see what kind of a return that would be. If we have 0.64 divided by 1.86, it's about a 34% return. So some people might be happy with that. Some people might not. In our class, for our rules, we're happy with it. We're going to go ahead and proceed with the trade. Our loss on this could be 186. Let's figure out how many contracts we can do. We probably can do more contracts on this one simply because the strike width is smaller. So we might be able to do more contracts. So 1,500 divided by 186 gives us the idea we could do 8 contracts. Okay. Our template, we just had it give us the 1. So now we're going to go in and change the quantity. Again, if you're a creature of habit and do the same thing every single time, you could build that into your template. This is good till canceled on our stop at 100%. This is good till cancel on our, if we hit our profit target, we capture 70%. We're not trying to get all the watermelon out, right? I sliced some watermelon over the weekend, and I noticed that I kind of cut the watermelon the same way that we can treat credit spreads, which is I'm not trying to get every single piece of watermelon. That takes too much time. Okay. In this case, we risk a little bit more than maybe what we need to try to get every little last penny out of it. That's our reason for doing a 70% target. Now we're going to hit confirm and send. We're going to send this to our grouping here for our short put verticals. We're going to send it on the way. Now, I'm not sure if our initial order actually filled here. So we're going to just take a quick look and see if it's still sitting out there. There's our Nike. It did fill for us because those are our exit orders. So we are in good shape. We've got Nike, STEC. No, it's Etsy. Etsy was our first one. That hasn't filtered in yet. I'm going to give it an opportunity. If it doesn't fill by the end of the day, I'll come back and check on it, maybe adjust that a little bit if we need to. Okay. We had some trades. I told you we've kind of been on a nice little streak with this bullish market. They don't always work out that way. In fact, we've had trades in our class example account that didn't go our way because sometimes that's what the case is. And so we will manage those and maybe use some other strategies to unwind those trades. But let me show you some that were just recent for you to take a look at here. The first one we're going to look at is Gilead. Now, Gilead Now let's back up here a little bit, was a stock. It had been trending fairly nice. It had broken out of a flag formation. This was a different trade. And then we got in it again when it was bouncing here off the 10-period moving average. It ran up for a couple days, and then what did it do? Well, it didn't go where we thought it was going to go. We thought, maybe it would kind of head up here bullishly. But instead, it went down a little bit. Here's our 105 strike price. That's our short leg. Oh, good. We just got filled there. And then we were kind of having to wait for it for a little bit. We didn't have class week because class last week was the 4th of July. We're all out celebrating, having a good time. The market's closed. So July 1st, I believe, is the day it went ahead and executed for us. So I couldn't show you that last week, but we had to exercise a little bit of patience. Now, did this one go up all the way? It didn't, right? In fact, it went opposite. One day it went below our short strike price. We didn't freak out and close it. We said, this thing could still work out. So we exercised patience, and it did. Okay. On this trade, we ended up having a gain here on Gilead of about, I'll just show you here real quickly in the account statement. On our Gilead, we were initially filled here for a $1.30. We wanted to get out when it was about, looks like maybe 27 cents, and we got filled at 28 cents. So just a little bit better. And so we ended up there being positive about 102 on 4 contracts. And so that gave us a gain of about $408. So not too bad. Kind of a base hit type of trade, but we did have to exercise patience. Now, another trade that went well for us, Airbnb. Oops, I got to put in the ticker symbol correctly, ABNB. There we go. And it was one we put in our last class a couple of weeks ago. Let's maybe back up here a little bit so you can see. It had been bouncing off this diagonal support line. We got in here at the green oval. It did its thing for a couple of weeks, and yesterday it hit our profit target like we've been putting in on these orders. We didn't have to try to catch it. We didn't have to try to say, oh, trade, get me out of the trade. We didn't have to do that. We just let the software take the action for us because we already knew what we wanted. Okay, so yeah, this one, we had 4 contracts on it as well. And we ended up with a $404 gain. So we had a $408 gain, a $4 gain, and I'll just show you real quick here as we're wrapping up. Las Vegas Sands, it did the same thing. We got in here on the breakout of the horizontal resistance, and it only took a few days till July 1st. Triggered us, we're out of the trade. Okay, so not all trades end up this way. We have had our share of trades that didn't work this way, and we've had to do something different with them. All right. But if you, in the beginning, know when you want to get out at a profit target, which we've talked about today, and a dollar loss, basically 100% loss. Some people might want to do that. Then you can automate that. So what I want you to do is practice in paper money. Practice building that template, doing it the way that you like it. I know some of you are like a 50% person or an 80% person. That's when you like to hit your target for. So just practice that. Try to build that template. If you have a problem with the template, send me a note in the comment section of YouTube. All right. But that should work out for you. All right. So practice that if that is something that interests you. Well, again, appreciate you being here today. I did not see a survey out here today. But just make sure you subscribe, follow Scott and I on X, and come back at the top of the hour for ThinkScript Studies with Mike Fairborn. He's got a great class planned for us. We'll follow up on these trades next week. I'll see you tomorrow in Trading a Smaller Account at noon Eastern. We'll see you then. Bye-bye.